Okay, good afternoon to all of our viewers and listeners from across the continent. Welcome to the Trading Edge podcast, recording live from South Africa. My name is Sihle Tuta, and I'm here with my colleague, Exness who's our senior market analyst. Terence, how are you doing today?
I'm very well, thanks, Sihle. How are you?
All good, man. All good.
Good. Yeah.
Some interesting developments have happened in the markets recently, and I think most notably is BTC reaching 100K after a while, which really got some excitement from traders and crypto traders across the board. Um, what's your take on that? I mean, what do you think caused sort of that price hike
Yeah.
of BTC after it was trading below that for the longest time?
Yeah.
I think a lot of guys who are holding Bitcoin were really keeping their fingers crossed that it will reach that price.
Yeah.
But it's been a long time coming.
Yeah.
What's your take on that? What do you think caused Bitcoin to really reach that price level, and how long do you think it's going to stay there?
Yeah. Sihle, I think first thing is, man, the people who are probably crying lots and lots of tears
hmm
who missed that massive dip I think we had in, was it 2022?
Yeah,
The
around the
the
time.
bottom that we got to about, below 16,000.
hmm
Uh, and, give and take. And I mean, that was a very good level to get involved. And because since then, it's never really gone any lower than that. It traded sideways for a very long time. And to me, Bitcoin, BTC is a remarkable asset class in that, when it came onto the scene,
hmm
people tried to understand where it should fit in. And they tried to box it,
Yeah.
if I can call it that. And what that also said to me was appreciate the instrument for what it is,
hmm
and your traditional asset classes
Yeah.
do not necessarily have it to fit in them. Where you find a lot of investment professional, financial services professionals, struggling with regards to, comprehending its, call it, price movement.
Yeah.
I mean, you'd hear some say it's difficult to value. It doesn't have a valuation matrix like
Mm,
how you'd value MTN
mm,
or how you'd value Apple.
mm,
And that's why, it becomes difficult for them to include it in their investment portfolio.
mm.
And I think that's where the biggest miss was in terms of the opportunity to understand what cryptocurrencies as a whole
Mm.
as well are, and the technology behind it, because it's all technology driven.
Okay.
And as we look at where we are going, I think one of the bigger themes as well that has been driving the tech market has been AI. Now you'd ask, oh, how does that relate with Bitcoin?
Yeah.
So it's all around regulation. When we look at the current move,
hmm
getting to 100,000, because you remember,
So regulation has a lot to do with it.
yeah, regulation has a lot to do with it, because it's not the only driver.
hmm
When we spoke about earlier, Bitcoin dropping, as low as it did
Yeah.
then, the biggest driver at that time was higher interest rate.
Okay. So maybe can I just interject?
Sure. Yeah.
So you said before it was high interest rates,
Mhm.
and you've mentioned one of the key drivers is regulation. So
Mhm.
before you move on to the second one, maybe let's take a few steps back,
Mhm.
right? What are the advantages of crypto as an asset class over the others, especially from a retail trading point of view,
Yeah.
right? What advantages does it have, or maybe even disadvantages? What differentiates crypto as an asset class, um, over its other, you know, bit?
Yeah. So liquidity is the biggest thing.
Hmm?
The most liquid cryptocurrencies tend to be the most traded,
Okay,
and that liquidity comes from supply and demand.
far more liquid than other asset classes.
Or some crypto, say Bitcoin,
Yeah.
for example, or
Okay.
Ethereum, or XRP,
So if we take the top 10,
yeah. So if you take the top 10 in terms of their liquidity, which is the supply and demand,
yeah,
and then in comparison to other asset classes, the price volatility, because if you're going to trade, especially as you mentioned,
mm,
for retail traders tend to be in a position for a short space of time. I
yeah,
mean, we've spoken before about the different trading strategies, your scalpers, they're in and out. And certain cryptos, offer that volatility where you are able to capture pips on the way up or on the way down or both more frequently than,
mm,
other asset classes. So, for example, if you look at currency pairs, there are more currency pairs that are a lot more liquid,
okay,
that tend to support certain strategies over others, So that liquidity, that drive around liquidity also filters into regulation.
mm,
Now, post the high interest rate environment,
hmm,
and what did the high interest rates do? They reduced liquidity. That's what high interest rates really tend to do. Their aim is to reduce liquidity. So higher interest rates affect liquidity, and that is the purpose because there's too much liquidity in the market, which is too much cash. That is what then drives up inflation. Inflation is high for us to bring it, you know, to the preferred target or, target range. Then the central banks will increase interest rates. And that, reduced liquidity in the market and affected, your cryptocurrencies. And we'll just, use Bitcoin, for example. So you saw Bitcoin coming lower as interest rates, moved higher, which was a very similar move that we saw in gold, right? And so if we compare, say, Bitcoin to gold, which was a comparison that was also you done for quite a while, in terms of that correlation and establishing that correlation, would see that again, gold is affected by higher interest rates, higher inflation figures. Gold tends not to do well. Some will argue gold doesn't have utility other than, storing your money, but that is the utility.
yeah,
The use is not going to be the same for everything. That's the purpose, a
yeah,
store of value. And that's why central banks are, increasing their holdings in gold in periods of high risk. They tend to flow into gold. That's the purpose, other than it being a precious metal for jewelry
okay,
reasons, right? So if we look at, Bitcoin on the other hand, it's a very powerful speculative tool,
okay.
right? For you to speculate on where things are going. And people flowed into it for the returns that it gave. So you can imagine,
Not necessarily as a store of value or as
y-
a medium of exchange.
you see, so it's now adopted all of those
Mm,
characteristics,
mm,
as it has evolved. And some of those characteristics it has actually adopted a lot better than, for example, gold.
mm,
So if you got Bitcoin at 1,000 and it's now at a
yeah,
100,000, the math tells you alone that that was a remarkable investment.
yeah.
And you
Except for the
realize,
guy who spent I don't know how many bitcoins paying for his pizza
yeah,
back then
yes,
when
yeah,
the Bitcoin first launched. I mean, he was like, "Ah, what the hell is this thing?"
yeah.
And he took a lot of Bitcoin and he went and paid for his pizza for it. Looking at
Probably
the
wouldn't,
value
yes.
now, he must be like, "Oh man,
That was a very expensive
pizza,
pizza,
a very very expensive one indeed."
when you look at it now. So the characteristics of Bitcoin are evolving,
Okay.
as you mentioned, that's a very good example.
Mm.
Would you go buy pizza, with one Bitcoin right now?
Of course not. Maybe the whole pizza chain in not just one box of pizza.
Right.
So we've mentioned regulation,
Yes.
and the second one was
Inflation,
inf-
in interest rates. Yeah.
interest rates,
Yeah.
and the third one will be what, which you would say has driven Bitcoin to this
Yeah.
price level.
I think FOMO, fear of
Okay,
missing out.
yeah,
So, the case in point, that purchase of pizza, that's a remarkable case study.
mm,
And I would say fear of missing out, and product and instrument knowledge and use has evolved. So that will be the third thing. So those who understand its value and its trajectory over time are loading up on it.
Mm.
They're increasing their position as it goes. You have some, even if it drops, they don't necessarily come out of the asset class, they just add more
Yeah.
at lower prices, even though they might have some units that they
Yeah.
bought at higher levels. But now the understanding, now if you compare, for example, how gold in terms of return has done over a 5-year
Mm.
space of time.
Mm.
Yes, Bitcoin has been volatile, but so has been gold. Gold is extremely volatile,
It is.
right? That is why it's one of the, amongst the most traded instruments globally, that we see, from where we sit. And that also is quite similar to Bitcoin. So when you look at that massive, price move,
Yeah.
and you think to yourself, man, it is actually going to get to 100, maybe at 90,000, I can, get quite a bit more myself, some with deeper pockets, more others, more units
Okay.
than others. And that demand as well. But the base of this price move is regulation. And why regulation? Because it's not just regulation, but you'd see that Bitcoin started faring very well during that, US presidential election. And in particular, when, US presidential candidate at that time, who's now the president elect, Donald Trump, he really took a position to say he's pro crypto, he's pro the industry, and to roll out regulation that is really going to be supportive of that industry. And only not regulation that is supportive of that
Mm.
industry, but positioning America globally
Yeah.
to be a hub for the industry is quite remarkable. So that gave, crypto, and as we're talking Bitcoin, the legs to keep going and be the gift that keeps on giving.
Which brings me to my next question. Um, what do you think is the sentiment about Bitcoin and all the other cryptos from the key industry role players,
Mm.
including the central bank, the commercial banks, retail banks, and all the other guys who I would say stand to either benefit
Mm.
or lose from the success of crypto as a form of exchange?
Mm.
What do you think is their sentiment or their position
Yeah.
around the whole concept of crypto? Let's start with the banking sector. Central banks, commercial banks, retail banks, investment banks. What do you think? How do they feel
Yeah.
about crypto, and especially crypto garnering more and more support
Yeah.
across the wider spectrum? What's their position?
So, in my view, I think they're quite behind the curve with keeping up to date with the progress
Hmm.
of the technology of the industry. And it's always the fight,
Mm.
with financial markets, financial service providers,
Mm.
with regulators, with regards to products that are ahead of regulation.
Mm.
And these institutions tend not to be, I mean, that's why we have Silicon Valley,
Mm.
and the different forms of Silicon Valley in
Mm.
different countries, because of, that drive to technology. So instead of quickly upskilling and getting the necessary resources to understand the technology and the technology driver, behind this instrument and asset class,
Mm.
they sought to stifle its growth. They punted more the risks associated with, rather than the progress of where the world is going with this. And it started off being, as you mentioned, when Bitcoin started off, you look at the price, how it was priced, and often it was ignored
Mm.
at that time. Like, it's probably going to be something that's just going to fizzle, possibly a bubble that's going to be burst. There'll be a lot of tears on the street,
Mm.
and, the offenders will be punished heavily and deterred from ever trying to do something like
Yeah.
this again. I think that was the position. Now, from a central bank perspective, this is now a level and a layer within the market where there is quite a lot of liquidity
Mm.
that they don't necessarily have control over. And that is where a lot of the concern starts coming. Because remember, for any central bank, depending on the mandate that they have, they are ultimately, controlling the supply
Of currency.
of currency
Mm.
and using other tools, your interest rates, to,
Yeah.
manage co-manage the economy, from a monetary policy
Mm.
perspective. Now, if you look at monetary policy, it really doesn't cater to this type of instrument. But yet, this instrument and asset class is garnering a lot of liquidity that is outside of their mandate, so to
Yes.
speak.
So the inflow of capital from, what the central banks have control over
Yeah,
to crypto is quite huge.
it's
And
quite
yet they
huge.
don't have any control or any influence
Yes,
to the volumes coming in and out,
yes,
transacted using
yes,
crypto as a form of exchange.
yes, yes. So they have rolled out other forms of digital currencies,
Mm.
in a way to counter, perhaps
Yeah.
in some way, and to drive back that liquidity in a more, as they would say, regulated and secure
Mm.
asset compared to what this asset class would be, say Bitcoin,
Okay.
right?
So maybe let's demystify this, right? Bitcoin reaching $100,000. What does it mean for someone who bought Bitcoin, let's say at 40,000,
So it
and
depends.
vice versa?
Yes.
Yeah.
So firstly, it'll depend on how much Bitcoin you bought. So maybe at 40,000 you bought 5 coins,
Mhm.
for example, or you mine 5 coins,
Mm.
because there's different ways of owning Bitcoin. Either
Yeah.
you're going to mine, or you're going to actually outrightly purchase what has been mined,
Mm.
at a premium to the miner,
Yeah.
right? And so perhaps you have 5
Mhm.
coins that you have. So 5 times 40, that's 200,000. That was your initial capital investment,
Yeah.
$200,000
Mm.
as well for that. Now, this is now 5, sorry, no, yes, 5 multiplied by 100,000. That's now 500,000.
Mhm.
So in that space, from an initial investment of 200,000, having 5 Bitcoins at 40,000
40,000, yeah.
a coin, now you have 500,000 on those same 5 coins. Now, 500 minus 200,000, that's, gains of 300,000. And you also look at the time horizon in which you've realized that gain as well. So that's what it'll mean. Now, we go back to that pizza story as well.
Yeah.
Even more remarkable is those who bought even lower, in the thousands, or,
And
hundreds
had
of
the
dollars,
fortitude to hold.
and the fortitude to hold.
Mm.
And that's where the other cryptocurrencies also then came on with regards to the blockchain technology, creating various cryptocurrencies on that blockchain technology. And that's where investors then came in, having that outlook to say, wow, this is what Bitcoin has done over this time. Let's actually get into, it could be Ripple,
Mm.
while it's still low, because if it follows the same trajectory as Bitcoin has, it's only bound to do well. Now, we mentioned, right now there's regulation, in the favor of cryptos in general. We mentioned prior, it was higher interest rates playing against them, that drove the price lower,
Mm.
which now we are in an interest rate cut environment. That's also positive for crypto.
Mm.
And the third thing, earlier, we had the Securities Exchange Commission approving,
Famous SEC.
yes, the famous SEC. So that also sort of filters into regulation, which was that initial, what can we say, commencement of,
Mm.
a resounding recovery for
Okay.
crypto when they approved the, electronically traded funds that were created by BlackRock
Yeah.
on Bitcoin. So that also saw capital inflow coming into the market, where other investors, if they didn't want to invest in the underlying security, they at least got into that, which ultimately still drove that demand for the underlying security.
Okay. But my question is to you, how long do you think it's going to take before mainstream investment managers include crypto as an investable asset
Mm.
in their investment strategy?
Yeah.
You look at, for instance, some of the big asset managers across the continent who manage, hundreds of millions of client funds, whether it's government, employees, pension funds, or whatever the case is, who invest on behalf of their clients, which is their employees or some other companies. How long do you think it's going to take for them to recognize and start to proactively invest in crypto and include crypto in their investment strategy,
Yeah.
if not already?
Yeah. So they're already doing that.
Yeah.
Some a lot sooner than others.
Mhm.
Hence, we saw BlackRock,
Yeah.
initiating that ETF,
Mhm.
which they got approval for.
Mhm.
So they are institutional investors that have positions and
Yeah.
holdings in crypto, and
Mm.
that's also
Mm.
been a very big driver because they have deep pockets
Mm.
and they can take bigger positions,
Mm.
right? So hence, going back to my earlier point, that those that don't have holdings in the currency are deterred, in the cryptocurrencies, are deterred by understanding the instrument, the underlying technology, and the future forecast. So
Mm.
they are behind the curve with really, you know, the risks and the advantages of everything, and missing out on the opportunities. Because I mean, if you're getting in at 100,000 now, that's very rich. The moment
Mm.
you'd need, the market to retrace on that, and we've seen that. The market, prior to being getting to 100,000, got to 70,000, retraced, quite deep, came back, got to 80,000, retraced quite big. Now it's pushed back to 100,000 because there's also speculators,
Mm.
in the market, in any market. In stocks there's speculators, in currencies there's speculators. So for market participants to view this asset class as it's going to be somehow immune to speculators is trying to remove the very reasons why financial markets work in the first place. Because investors do need speculators for that liquidity to remain for an asset class. So what that means is, if we look at that outlook for these institutional investors, I think they need to start investing in the knowledge and technology and getting in on the curve with regards to having some kind of holding for their investment.
Look, I fully agree with you that we cannot ignore the whole aspect of speculation
Mm.
when it comes to crypto because of the volatility that's there.
Yeah.
However, let's look at the main reason why Bitcoin was created.
Mm.
I don't believe that Bitcoin was created for speculative purposes,
Mm.
right? The people who created Bitcoin created it as a medium of exchange,
Mm.
as a form of money.
Mm.
Yes, we know and understand that all money, all currency is now used for speculative reasons. People buy and sell forex. People trade in forex,
Yeah.
not because they wanna, take hold of the currency. It's because they want to benefit from the price differences,
Yeah.
the buying and selling. So the guy who bought Bitcoin because he wanted to use it
Mm.
as a medium of exchange for paying for things,
Mm.
when it goes up drastically
Mm.
and when it goes down drastically, how does it benefit and how does it impact them?
Yeah. Also, it's the same as any currency,
Yeah.
right? It's purpose.
Mhm.
Um, if you want to buy a real world asset,
Mhm.
you would need currency, be
Yeah.
it South African rand, US dollars, Kenyan shillings, Nigerian naira. I mean, we can have a room full of the currency, but if the currency just stays in this room filled to the brim
Mm.
without being spent or chasing a particular good to purchase a particular good or service,
Yeah.
it's really not going to have any purpose,
Mm.
right? So for that individual who has the currency, it ultimately comes down to the purpose of use,
Mm.
with purpose.
Mm.
What is it that you're trying to consume, be it a product or be it a service? And the ability of this cryptocurrency to be used as a medium of exchange for that product and service,
Okay.
which, you know, obviously, if it gets to 100,000, there's more of that particular product and service you can now consume,
Mm.
compared to it being lower. So the question then comes to that reason of, how are you balancing your portfolio, right? So ultimately, if you have gold, it's a store of value as a safe haven asset and also as a medium of exchange. Um, Gold in its purest form, depending on certain rules and regulations, country specific, you can use the actual precious metal to exchange
Yeah.
for a good or service at an agreed price.
Yeah.
And then we speak of the world price of gold. So we've seen gold getting to 2,700, and it's the same logic. At 2,700, the question comes, does that particular holder of this asset class want to liquidate their position in exchange for another good of service?
Mm.
If it is yes, then at that price, it makes sense for them to liquidate partially or all of that position to meet the need that is on the other end,
Yeah.
right? If there's no need on the other end, how much of it are they willing to hold? That now comes down to investment strategy. It comes down to your trading strategy. And what I mean by that is you could speculate and say at $2,700, gold is top. You'd rather
Yeah.
liquidate that position, hold cash, and then when it comes lower, you are able to buy more units, and recover. Not only just recover that initial position, but it's a much stronger position that when it gets back to that same price, you actually have a lot more, in terms of purchasing power than you would have had. So I think that will be somewhat a similar approach.
Yeah. Look, I think it's quite a very interesting one because we cannot ignore the futuristic nature of crypto. Crypto is the future of money,
Mm.
right? And as much as that's what it was created for, but we also can't ignore the speculative nature,
Yeah,
right? You can trade crypto
yeah.
because of the volatility,
Mm.
which for me, I mean, as much as I acknowledge the value in holding crypto as an asset class, as a medium of exchange, especially if you're going to be transacting internationally. But at the same time, the volatility, if you take away the trader's cap,
Mm.
right? If you just look at it as a form of money, the volatility is a bit unsettling
Yeah.
because as much as if you look at the rand against the dollar, right? It's money. It's the dollar versus the rand.
Mm.
But there are price points where the rand reaches against the dollar where you're like, you know what? $1 for me to buy $1, I have to fork out 19 rand,
Mm. It's
which is expensive.
yeah,
And you'd rather wait if you're planning to transact cross border, you'd rather wait maybe for a better price,
yeah.
right? For you to pay fewer rands
Mm.
for your dollar,
Mm.
so to speak. But I suppose, like you said, you just have to, you know, make do with it and balance your portfolio appropriately
Yes,
and not put all of your eggs in one basket to ensure that, if things, turn, you're not
yes,
entirely wiped out,
yes,
because it's here to stay. I mean,
yes.
Bitcoin is here to, crypto is here to stay,
Yeah.
whether we like it or not. I mean, we've heard of stories of some big corporates
Yeah.
now accepting so crypto as a method of payment,
Yes.
for big ticket items. So yeah, it's here to stay.
And another way to look at it as well, Sihle, is ultimately the, because at Exness, what we offer are speculative
Mm.
positions through crypto CFD,
Yeah.
right? But ultimately, there's the actual coin itself.
Mm.
So holding a coin, the actual coin, is very different to holding a position in the market,
So holding the underlying asset.
holding the underlying asset.
Mm.
And that is where a lot of the Bitcoin value is driven, actually owning the asset. And that's why you find that even mining the cryptos or the various cryptos or Bitcoin in this extent has become more expensive because it's becoming more scarce because there's only so much of them that will ever exist.
Yeah.
Right? And because of that, holding the
What's the
underlying
number? Is it 21? No?
No, this is quite a large figure. I can't remember off the top of my head.
Yeah.
Right. But there's still plenty to go around. We're not anywhere close to
But fractional.
satisfying. Yes. That maximum figure of the actual coins that can ever be in circulation. So what that means is,
But wait, hold on. So the number of coins will never exceed.
In as far as Bitcoin.
Yeah, the number of coins will never exceed the number of coins in the market. However, if I understand it correctly,
in supply,
in supply, let's say 100 coins for the sake of the example, right? However, each coin can be subdivided and divided up to as many times as people who want to participate, which will then impact the value.
Yes, because of the demand and supply.
Yeah.
But no matter how much of these bits of the coin are, in different locations with people, there's only ever 100.
Yeah.
As you've said.
Yeah. So we'll never have 101 or 102 because Satoshi decided to emerge.
Yes.
From wherever.
And as far as the creation of it, unless something then changes, but that's where the whole technology conversation.
Okay, so we actually use the number 100 as an example, right? So what is the actual number of Bitcoin in circulation?
So 21 million.
21 million.
Yes, 21 million is the actual number of Bitcoin, maximum Bitcoin that can ever be in circulation.
Yeah.
Right. And so, then there's the other technology that will come in terms of the halving events, which relate to mining, the fees, and all of that. So, that technology behind Bitcoin, crypto, blockchain, and in this case, Bitcoin as we speaking about this in particular. So, and then, there's other, more technical points around that. But ultimately, I think the goal is if you are to get into crypto, the underlying asset is the investment. The position in the market, maybe through CFDs or ETFs, that's more speculative. And if you're more into a speculative position, then definitely the price on any given day is what is going to be of concern. Definitely as an investor of an underlying asset, you want to see that capital appreciation, which we can see owning the underlying coin itself. Realistically speaking, it has been a good investment.
Yeah.
In whichever way the market has dipped, we've got world-renowned stocks that have dipped and some are trading at all-time highs. So that's what the market is going to do. But when you have the coin, you still have the value that you can liquidate that particular coin in exchange for whatever good and service you want at a very good premium.
Yeah. You can have a look at our list of products on the Exness website. And you can check out our content on all our social media pages across, Instagram, Twitter, YouTube. And with that, Terence, I think let's wrap it up. Thank you very much for your insight.
Yeah.
And look forward to the next episode. For myself, Sishe, please like and subscribe and, engage with us on all our social media networks. And it's bye-bye for now. Thanks.
Thank you. Bye for now.
Bye.